it absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 17th day of September, 2015. Let's take a quick look at the numbers. S&P 500 is up less than a point. The Dow Jones up less than 2 points. NASDAQ up almost 8. There's 8. And the Russell 2000 is up 6. Those are cash markets. Crude oil down 50 cents, 1%, and gold down $2.60. Asian markets, remember yesterday there was nothing but green on the scene. Today we have some red. The Nikkei up 260 points, the Shanghai down 65 points. That's 2%. Hang Seng down 112. European markets, the DAX up 2 points, FTSE down 42 points, and the CAC 40 up 9. So there you have it. Pretty quiet out there. Happy Thursday, by the way, to you, whoever you are, wherever you might be. If no one has taken the time to look in the eye and wish you a happy Thursday. Allow me to do that right here and right now. Welcome back if you're returning. If you're here for the first time, a very special welcome to you. You should be able to see the chart I have up, which is the S&P 500 Emini Futures. Been on a pretty steady climb this week. Sunday night, Globex open, we moved higher. This was the 13th. Here's the 11th, Friday's close, and then the open, this red candle right there. And so a little bit of a move higher in the second hour on Globex Sunday night. Nice little pullback, but this was a continuation of the leg that started Friday, and then a nice pullback. In fact, let me stretch my fibs across there, and let's see, we got a 62% retracement, okay, which has led us to where we are today. So a leg and a retracement, and then this extended leg, and we're sideways now. I don't know, you want to call it 2 days from this high on September the 16th, yesterday, at 1600 hours. Swing high was 1999, and the high we've had so far today is 98 and a quarter. Currently we're trading 96. And of course, everyone, even the taxi driver and your gardener and everyone, everybody knows today's the Fed day, and it's not just any Fed day, but it's the Fed day, probably the biggest Fed day of the decade, which comes, you know, on the tail end of the big presidential debate last night, which we'll talk about some on the show today. It was, if nothing, entertaining, and it would be interesting to hear your comments and your thoughts and your ideas on who shined and who showed up and who didn't. I was surprised at how little we heard from some of the candidates. How much of that do we lay at the feet of the moderator? Well, I'd love to hear your opinion and thoughts on that as well. Now, a very interesting little piece of news today, which I find humorous. Traders are passing, as traders, as you can see, sit twiddling their thumbs waiting for this Fed announcement to come out. And I say the biggest of the decade because, well, we haven't raised rates in, I think David actually counted it up the other day. Was it 8 years, 7 years, 8 years? However long it's been, this will be the first potential raise in interest rates in exactly that long. And so it is a big day, and we're not looking for a big jump. We're just looking to see if there will be any increase, and if so, will the market accept it immediately? Will the market throw a temper tantrum? How will they respond? So we'll find out here in 1 hour, 47 minutes, and 13 seconds. Now, unlike your local newspaper, we don't have a page on our website where you can go to get your daily horoscope. We don't. Now, some of our traders do use astronomy as part of their calculations for the movement of markets, and they're quite deft at it. That's D-E-F-T. But we've all turned to the back of the newspaper, the funny pages, the word puzzles, that section of the paper, the family and entertainment section, where at some point in our life, and maybe some still do, check your horoscope just to see what it says. Well, some traders found Janet Yellen's horoscope to be interesting today. And let me just share this with you. To kill time before the announcement, traders, strategists, economists, and the media are trying to occupy themselves and second-guess their opinion on what the Fed will do, because frankly, no one knows. And that's something she's done a very good job of. Remember back in the day when the Fed announcement was actually a surprise? It hasn't been a surprise now for quite a number of years because there were no bullets left in the gun. It was doubtful that in an economy that's tanking, we're going to raise rates, so there's been no surprise. Doesn't mean we didn't have some volatility around the Fed, but nothing like we used to see when there was actually a surprise. And today we're back to that place in time where whatever comes out will be a surprise. Now, only 32% of traders anticipate an increase. So are you with the crowd or without? Anyway, markets are pricing in about a 30% chance of a Fed rate hike. Wall Street economists are roughly split down the middle, 50-50. And so in the final hours before the final decision, David Lutz at Jones Trading sent around the horoscope of Yellen, who was born on August 13th, making her a Leo. Here we go. You're going to love this. You're the missing piece of the puzzle today, Leo. As a result, people will look to you for answers. The good news is that you'll have them at the ready. Trust yourself. Information and new ideas may be flying around, and you may be called upon to make sense of it all. Don't be afraid to err on the side of the fanciful. Fanciful? This may be exactly the answer needed. Really. That's her. Now, of course, you got to wonder, who made that up, and is that really what it said? So I'm one ahead of you there. I went to a website I would not normally go to, where they give you the free daily horoscope, and that is actually what it said. So we aren't horoscope promoters, but I found it humorous, if nothing else. Something I don't find humorous, and I'll share that with you as well. And then we'll talk about the debate last night as to whether or not you found that humorous at all. A McDonald's franchisee of 49 years reveals why he had to get out. McDonald's bloated menu has driven one 49-year franchisee out of the business. Al Jarvis, who worked for McDonald's for nearly 50 years, told Bloomberg Businessweek that complicated new menu items like espresso drinks and the McWrap caused chaos in the kitchens, dragged down food quality, and led to excessively long lines at the drive-thrus, which is a death sentence in the fast food industry. He said he loved his job with McDonald's, but as he neared his 50th anniversary with the company, a company he worked for his entire life, he realized he couldn't go on. I just wanted to get the heck out. I don't think they know what they want to do, he told Businessweek. They're saying, let's go back to basics. Then they're doing these customized burgers, and they're talking about all-day breakfast. I feel sorry for the managers and the crew. That's just not our niche. We make burgers and fries. Jarvis' complaints are similar to those voiced anonymously by dozens of current McDonald's franchisees in surveys by former Janney Capital Markets analyst Mark Kalowinski. In the most recent survey, franchisees rated their 6-month outlook for McDonald's business as the worst in the 12-year history of the survey. I mean, it used to be if you had the money to open up a McDonald's franchise, it was just a no-brainer. I mean, if you followed the manual, if you followed the book, you hired the people to do the work, and it worked. You put up a McDonald's, and it worked. It happened. Not so much anymore. How do you take such a successful business model and destroy it? Or does the competition force your hand with the custom burgers and the fancy drinks and all of that? What does America really want? I think at this point, people who still go to the fast food restaurant, I think what they really want is the dollar menu. I think that's what they're looking for. All right. Well, enough of that. We'll talk here in just a few minutes about the debate last night. We'll talk about the markets. Michael's going to come in right now, give us a recap of everything that happened in the live trading room today. Things were a little bit quiet. Concierge Trade Alerts, things were a little bit quiet there as well. Not much happening. Market's pretty quiet as we move into this Fed announcement. But Michael will come. He'll share with us everything that happened in the live trading room. I'll be back with our good word for the day. David will pop in and we'll talk about the debate and we'll talk about the markets. And then our every other Thursday friend, Ed Corey, will be with us. He's only got 30 minutes today. So we're going to get him in on time and we're going to get him talking on time so he can share with you as much as he has and answer all of your questions. So be sure to have those ready. Okay? Now, did I say 11:30? That would actually be 1:30. Yes. From 1:30 to 2, Ed Corey will be with us today. He's normally with us about an hour, hour and a half. He's on a short schedule today. So we're going to scoot right along. Michael, if you're ready to take it over and take it away,
okay.
Go right ahead.
I am here and I am ready. Let's do that.
Partners meeting tonight, guys. If you're on the trial and you're ready to become a partner, be sure and check your email. Michael, I'm sure, has sent you a notice, and you need to take care of that so you can be in the meeting with us tonight.
Yes, indeed. All right. Here we go. Ready? Ready. All right. I'm going to hit record, and then we'll be rolling. Here we go. All right. Good afternoon, everyone. Let me start out with the free trial. All right. To take our free trial, if you have not taken a free trial with us, well, I got to say the date first. Today is Thursday, the 17th day of September, 2015. If you have not taken a free trial with us, go to CFRN.net right here. And over here in the right-hand column, put in your name, put in your email, click on register for a free trial. When you click register for a free trial, you'll be sent a confirmation link. Okay, you must click on the confirmation link. If you don't click on the confirmation link, then you are not going to get a free trial because we don't get anything until you do. Okay? So, do that. Now, to view the live trading room results, you click right here where it says view live trading room results. Click there. And then here where it says to view our daily results spreadsheet going back to January 2nd, click there. Just click there. And here comes the spreadsheet. Okay. So scroll down to the very bottom where it has today's date, 17 September. And you will see in there the results from today. All right, today we made 8 ticks in the Russell, 4 ticks in crude, and 4 ticks in gold. All right. We didn't get a lot of trading in today. We only traded those 3 markets. The euro didn't give us any opportunity. Natural gas didn't. The ES, we didn't trade. Just those 3 markets right there. Okay, we took 19 minutes and 8 trades to get to our goal for the day, and when we got the goal, we were at $180 a contract, and we took a total of 16 trades today. Okay, so on the month, we are now up $2,825 a contract. That's over 12 trading days, averaging $235 a day. If you apply an $8 commission to every trade we've taken, then you would have a net profit of $1,113. If you applied a $5 commission to every trade we've taken, you would have a net profit of $1,755. I just wanted to point out, if I get my goal for the day and I give it all back, it's a blue day. Blue day, not a yellow day. Yellow day is the day that we end positive, but we didn't get the goal. And anyway, on the year, we are now at $44,560 a contract. That's over 173 trading days, averaging $257 a day. Okay, that's gross profit, $257 a day, average. All right, so we're almost halfway into the month, and we're up $2,800. Now, I've shown you that. Now let's get into the actual trades. Okay. On the ES, I don't recall. I guess guess I did show you one trade here. It was a momentum long trade that went about 3 ticks, and then it came back down and just went sideways forever. Let's see, if you got in here and you didn't get out when you closed above the MA1, there, or there, or there, or there. The entry was here at 87 1/4. It dropped all the way down to 84.78, so it dropped 2.5 points. There was plenty of opportunity to get out of this thing, though, and you should have. When it closed above the MA1, as soon as you get any profit in, you're supposed to move your stop to break even. It does have a long trade right here. This was a higher swing, so you should have been long from right here at 87.75. Right, as we move into the FOMC space that we're getting into here, I just expect things to get really quiet and slow. That's what I expect anyway. Yeah, just a reminder to everyone, if you have any trades on right now, you know, be mindful of them as you get closer to 2 p.m. Eastern time. All right, unless they're just option trades, in which case still be mindful of them. Be ready to take the option off and take some profit, but you know what your max risk is on an option. You've already paid it. All right, so the next thing is gold. Okay, in gold we had a couple of trades. We had this one right here where we took 4 ticks profit off the BBC, and this one where we broke even. That was it. There are a couple other ones in here that we outlined, but then you see how gold got stuffed into this range, and I don't know where I drew the range. I guess I drew the range over here somewhere, I think, is where I drew these red bars and the triangle lines, and it was just stuck in there for the rest of the live trading room. Okay, so we got 4 ticks profit on the gold. On the Russell, we had just a few trades in here. Our first trade was right here. We took 6 ticks profit on that one. Then we took 1 tick profit here, putting us at 7. Break even on that one, and 1 tick profit over here, putting us at 8. And that was where we ended the day on the Russell. You can see right in here, there was a nice long trade that we missed out on. There was another momentum trade right here that we missed out on. And during the break, not really much of anything. There's a long trade from right here if you want to take it, but it's going up into the MA1 and dynamic resistance. I would not trade right now. We ended with +8 on the Russell. Okay, +8. Now crude oil. Crude. Scrolling back. Here we go. All right, with crude, we started out with a loss on crude. Our first trade of the day was a loss on crude. Then we got 1 tick back on this one, putting us at -7. 5 ticks back here, putting us at -2. A break even there. 10 ticks profit on this one, putting us at +8. And that was our goal for the day right there. From +8, we got a couple of ticks profit here, putting us at +10. 1 tick profit here to +11. All right. No, I think that was a break even. This was the 1 tick profit to +11. Okay. We missed this nice trade right here. Stopped out on that one, putting us down to +3. Missed that one and that one. And I'm sure we missed something over here too. Short trade right there, a short trade right there, there, and there. We did get this one. We got 1 tick profit on that. That was right at the end of the live trading room, putting us at +4. Okay. During the break, there was still some pretty good movement here on the crude. Right here was a nice short. Okay. And let's see. Nice short over here. And there. And there. And that was about it. Okay. Yeah, with that, I am going to go to the next market. All right. We ended with +4 on crude. All right. The next market was soybeans. We didn't place a single trade in soybeans today. Started out right here, and you can see how flat it was. We did not place a single trade in the soybeans. Okay, I did have one left on from yesterday, and I got 12 ticks profit on that. But see, but that did not count toward the total in the live trading room. I had some other trades on today that I took in the Russell that got me, much more profit in the Russell, but those do not count toward the live trading room either. The euro, just like soybeans, not a single trade. Okay, not a single trade to be had in the euro. Yeah. Okay. You need to go down there, and it seems as though I just lost control of my DT Pro. Okay. Well, anyway, that's what we had today. So let's now look over here. We'll go over the results again, okay? To sum it all up, on today, the 17th of September, we had 8 ticks profit on the Russell, 4 ticks profit on crude, and 4 ticks profit on gold. All right. We took a total of 19 minutes and 8 trades to get to our goal for the day. When we closed out that trade, we were up $180 a contract. We had 16 trades today. Okay, on the month, we are now up $2,825 a contract. That is over 12 trading days, averaging $235 a contract. Okay, on the year, we are now at $44,560 per contract. That's one contract, 2 hours a day, for 173 trading days. All right, so we're averaging 257. 257. If you have not taken the free trial with us, then go here to our homepage at CFRN.net. In the right-hand column where it says register for a free trial, put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. Make sure you click that confirmation link, okay? If you don't click the confirmation link, you don't get a free trial. Simple as that. All right? And that is that. With that, guys, I'm going to stop my recording. And we can head back out to Phoenix, because right now my mouse and DT Pro do not seem to be getting along. You see, I can do it from here, but it doesn't do anything when I click on this. Let me try this. All right, so with that, the recording is done, and we can head back out to Phoenix if Phoenix is ready. There wasn't much to do in the recap today.
Yeah, same with the trade alerts overnight. We were just kind of quiet.
Well, it's probably not a bad thing, because our guest has to be on time and only has a short time today. And my mouse is stuck. Well, not my mouse, but I can't click on anything here on DT Pro for some reason. This chart is dead to me.
Do you have an open command window somewhere?
No, because I can click on other. I can make other windows pop up, like that one. I just can't do anything with the Euro chart for some reason.
Yeah, I had some issue the other day with it. I forget what it was. Something along those same lines.
Well,
I don't remember how I resolved it, but I'll take the charts back.
Okay.
And I'll open a chart.
Let's see, I can't minimize that either.
S&P 500.
There it is.
Emini Futures. Okay, we opened the week right here. Pull back into this zone. Got a bounce. We did a leg and a retrace and a leg. These are this week's zones. The lowest zone we've touched this week's 51.52. We consolidated down at 51 or 52, 51.52 for 1, 2, 3, 4, 5, 6, 7, 8 hours. And then we made a run up to 59.60 where we hung out for a couple hours, and then back to 51.52, back to 59.60, which gives us a nice little, after the fact, we can see this double bottom, and then only an hour of consolidation right at the zone 59.60, and then we launched a good attack and moved, took out this swing high and this swing high, and actually got to the zone overhead 81.82, and we could see this today. It's possible 2016/17, depending upon what the Fed does. Now, the easy answer, some might say, well, if the Fed doesn't raise rates, we'll definitely go higher. Not necessarily. And if the Fed raises rates, we'll definitely go lower. That's not necessarily true either. Chances are we can do some of both. And the reason being is because along with just raising the rate or not raising the rate, the Fed is making a statement about the economy. Is the economy strong enough to handle a quarter point increase after all these years? And if the answer is no, that could create fear in some people, which could send the market lower. So we'll just have to wait and see. No reason to second guess it, because we'll know for sure in just a little over an hour. In fact, I thought I had a countdown camera over, or countdown clock over here. Basically an hour and 25 minutes. Okay, our good word for the day. This will be a multi-series. We'll talk about prayer. What was the recap of the recap, by the way?
Today it took us 19 minutes and 8 trades to get to $180 a contract.
To 180.
Yep.
Okay. Well, good job.
Thank you.
Very good. Okay, prayer. We all know we're supposed to pray. We say we pray. We tell people we're going to pray for them. And then we end up maybe not praying so much. Well, Romans 8:27 says the Spirit pleads for us in harmony with God's own will. This little mini series is called Different Ways to Pray, depending upon where you were raised, whether you were raised in a whatever denomination you may have been raised in, or community, might dictate how you were told to pray. You gotta get on your knees, or you gotta do this, or you gotta do that, whatever it is. But I think we all know, as we grow, that God's always around and always more than willing to talk if we're willing to listen. Some people say, I haven't heard from God in a long time. Really? Have you listened? That's the key. Someone who's better at prayer than you is already at work on your behalf. The Holy Spirit helps us in our weakness. For example, we don't know what God wants us to pray for, but the Holy Spirit prays for us and pleads for us, believers in harmony with God's own will. It's Romans 8:26 and 27. And the Holy Spirit helps us in our weakness. For example, we don't know what God wants us to pray for, but the Holy Spirit prays for us with groanings that cannot be expressed in words. And the Father who knows all hearts knows what the Spirit is saying. I encourage you to remember that, 8:26 and 27. Jot that down. Spend some time with that. Notice what it's saying. The Holy Spirit prays for us. Sometimes we've a hard time being fully present in prayer. We all know what it's like to be with another person when their mind is a million miles away. What's the answer? Try jotting down what goes on while you're praying. The two most common hindrances to praying successfully are A. Your mind gets easily distracted by other thoughts. B. You get tired. When author John Ortberg shared these two frustrations with a friend, he suggested that John go outside alone and simply invite Jesus to come along with him. Ortberg writes, "The next day I went to the ocean. I took off my shoes and started to run and invited Jesus to come along. I found the strangest thing. When I thought I was supposed to be talking to him, I found it effortful and difficult. Now that all I had to do was invite him to come and talk to me, I couldn't stop thinking about him. My mind kept reflecting on his being with me. I found myself wanting to point out the pelicans and the waves to him. People and concerns would pop into my mind, and I would find myself telling Jesus about them. Everything changed. So I encourage you today, when it's your time to pray, invite Jesus to come along with you and share each thing you do with him. And that's a good word for the day. Part 1 of 5. So we're going to talk a lot about prayer over the next few days. Again, it's something we all know that we should do, something that we say we're going to do. We promise people we're going to pray for them. We talk a lot about prayer, but maybe we don't spend so much time in prayer because we're not really sure what it is we're supposed to do. The disciples found themselves in the same situation. Here they were with the Messiah himself, and they knew they were at a loss. They said, "Teach us how to pray." And what he taught them was not something complicated, not something difficult. We all know the prayer, "Our Father who art in heaven," right? We learned it as kids, "Hallowed be thy name." It's that simple, yet that complex, yet that deep, yet that life-changing. So, again, when you pray today, just invite him to come along and see what happens. All right, let's take a look at Concierge Trade Alerts. David's going to join us a couple minutes early today, so we'll have a few minutes to talk about the debate, get your thoughts and ideas and opinions on the debate, what you saw, what you heard. Let me find them. Here we go. Okay, last night we said to consider being long above 1991 or short below 1978. We did make it through 19. Oh, this is the wrong month. I knew something looked off. ESZ5. Let's try December. There we go. Now that looks more like what didn't happen. Okay. Now do I still have, I still got 8182 right there. Yep. Yep. Okay. And what I don't have is this for you. 37. I was sitting here staring at that thing and I was going, what's wrong with this picture? Well, now I know. And we'll put that lower. There we go. So 36.37. So on the Globex Open Sunday night, we did move higher. This is still the 13th. Hang on for me 1 second. 1 second for me. That's what I get for having that thing open when I should have it closed. Okay, so Sunday night we did rally higher on the open. This is the 13th. We did pull back, do the dance between these two zones. We still put in the same double bottom, okay, but it was at 36.37, not at the aforementioned 51.52. Again, that's another glimpse into the nature of the zones and previous price action, okay. Consolidated here for 2 hours and then made the run. All right, now what we were looking for is to be long above 91, which hasn't happened yet, or to be short below 78. That's what we're waiting for. Okay. Now, I'm going to park it right there for a moment and check and see if David is here with us yet. Because he was going to pop in early. Let me have a look.
No, he's not.
All right, he'll be here shortly. Okay. On the Dow, let's take a look at the Dow. I think the YM, we got a trigger, but just barely. Now the alerts went out last night, Wednesday night, 2200 hours. Okay, we were looking for, see how this, this really gives you an idea of the volatility, how things have just really gotten quiet as we head into this Fed meeting. So we were looking for a long above 16,685. Or short below 16,625, which we got. But as you can see, there was 5 points there, just enough to get your stop to break even. Nothing to write home about, and so we shan't. There we go. All right, we'll talk about crude and the Russell and the rest of the markets here in just a moment. We're going to pause for a brief station identification, and we'll be right back with David from Page Trader. So stand by, don't go away.
Listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
Don't need you now on the way. I thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel that same way too. Oh, I love you for today.
Good morning, Dwayne.
David, good morning. Welcome to the show.
Well, thank you. Pleasure to be here, and I hope everyone's having a wonderful morning on Fed interest rate Thursday here in September.
Yes, that's the official name that we have given it. 22.9 million viewers tuning in last night. I don't think that many will tune into the Fed announcement today. Jeb Bush admitted he smoked pot 40 years ago. So he said, I know Mom's not happy about this. So, yeah, the Fed announcement, that's what the world is waiting for, waiting on, and it is now an hour and 12 minutes away. And what are they giving it? A 30%, I think. They had a little note here. Is that what you've heard, about a 30% chance that they'll raise it today?
I haven't heard. I have not been looking at the news. I just, I don't know the numbers, honestly.
I read them out earlier, and this came out a few hours ago. Markets are pricing in about a 30% chance of a Fed rate hike. Now, I don't know how they come up with that number. Wall Street economists, on the other hand, are roughly split down the middle. And I think that means as to whether or not we should or we shouldn't. So,
Jerry Fagnant has said that the stock market is indicating it believes there won't be a rate increase, and the bond market is indicating that there will be, which is interesting. But often in these types of important meetings, and this certainly qualifies as probably the most important Fed announcement in the last 9 years, that's a long time, the market often runs into that date and then corrects itself. In other words, the S&P is running up into the Fed announcement and could very easily turn around and be substantially lower after the completion of this move up. And in doing so, basically adjust itself to not look like it's betting on that way. You know what I'm saying? The meeting comes out and everything corrects for it. But I don't know how they get the 30%. My feeling has been since March of this year that at the very least the markets don't really justify. But it's not just the markets. There are other issues that the Fed looks at, taking them at face value, that it's not just a mere political thing. There's other things, obviously, other than the bond market. But the bond market is pricing itself now almost moving down in such a way to make it look like it's expecting that. So it's an interesting idea anyway that what Jerry had said about stock market looks like it believes it is not going to have a Fed interest rate hike. Either way, bond or stock, but either way, there's going to be a big move that comes out of this. It doesn't matter what they do today. If they do nothing, I think that still produces an important move. Certainly if they do something, that will really make for a big move. The big move won't all just necessarily be in one day. It could be a multi-day. In most cases, it would be a multi-day move. And you have to take the extra cautions that come with the volatility. And we probably won't, although we are in the markets right now, in the S&P, we are going to be out of the market by the time, no matter what happens, by the time the Fed announcement comes out at 11 a.m. Pacific and 2 p.m. Eastern Time today. So there you are.
Well, what do you think about the debate last night?
Well, it was interesting. I enjoyed it. I have to say that there were, the crowd is going to thin out pretty quickly here, I think, now that we're through the second debate. There's going to be some people that just don't really, a few anyway, that are probably not going to be able to stay through. I personally, if you're asking me personally, I think Donald Trump did okay, but I don't, it's hard to read on him because the public likes him for reasons other than his actual, what he says he's going to do and how he's going to do it, because he hasn't really defined how he's going to do it, and he's going to have to come up with that pretty soon. He's saying, hey, we're going to do such a good job at this, we're going to do such a great thing, we're going to do this, that, and that's great. But at some point here, he's going to have to say how he's going to do that. We didn't get any of that last night. So I'm not sure that he advanced. I mean, he advanced his cause, but it wasn't as spectacular, but he still is way ahead in the polls, no doubt. I thought Marco Rubio did an outstanding, just me personally, I thought he did an outstanding job. If you listen to his answers and his statements, they were so focused and crisp, and what he said, there was no extra words at all in it, and it was spoken directly from him. He's the real deal. I could live with a Marco Rubio as a president. I've liked him from the start, and I'm liking him more based on the kinds of things that he said last night. So I like that. I thought Chris Christie helped himself last night. I thought he made a great comment when he said...
I agree. He made a good showing for himself. If it weren't for Trump, I think he would be who's second in the polls behind Trump now?
Carson. Believe it or not, Carson's second.
Oh yeah, I heard them mention that
Genteel,
last night.
soft-spoken, genteel Carson. But real quick on Christie, he did a great thing. I mean, a real peak was when Trump and Carly were going back and forth about their careers and about her problems at Hewlett Packard and his problems with his bankruptcies. And Christie came out and says nobody cares about that. What they care about is their own careers. People want somebody that can lead the government and make things better overall. It was a great comment, very well put. It was one of the highlights. Another one when Donald Trump, in the recent past, in speaking about Carson and about him being a doctor, Carson's a supremely skilled, very, very high-level surgeon, and he's done some remarkable work. And Donald Trump, in his classic form, just said, well, he's an okay doctor. And Carson, who really is a class act, I mean, he's very genteel, so genteel that you almost wonder if he could, muster up the fire in the belly it might need to start a war if it was necessary, or fight back, or whatever the thing is. But he's, you have to like the guy. He's very likable. But one of the reasons he is likable is that he has a very understated way of quipping back to you in a very friendly fashion. So last night when Donald Trump was talking about the size of the vaccination, the actual amount of liquid that's going into these babies, and saying, listen, if they could break that down and give the same amount but over time in smaller amounts, and the announcer said, or the questioner said, moderator said, well, Dr. Carson, what do you think about what Dr. jokingly or whatever Dr. Trump said? And he looked up to Trump and he said, well, he's an okay doctor. And that's exactly the line that Donald had used against Carson. And I thought if people were sharp, and I think people are, to catch what he was doing, was he was in a very friendly way giving him a backhanded compliment by saying, well, he's an okay doctor, playing back the line that Donald had said to him, claimed. And he's really much more than an okay doctor. He's a very, very brilliant guy. And I like Carson. I like what he said about his family, that his parents didn't let them become victims, and all of this stuff that Obama and this administration plays on so hard. They are so wrong-headed about the direction of this country. Anyway, bottom line is several people did very well for themselves. I think Carly did well for herself. I think the only thing that was off-putting, again, these are all my just personal takes, but the only thing that was off-putting to me was that Carly, she looked too hard-faced. I think she could have softened up a little bit. I was distracted by the firmness that the harshness kind of in her face. And listen,
the commentators were really talking about that.
Were they?
Afterwards,
yeah,
when they
I was
did the
distracted
spin.
by that.
Yeah,
I was distracted by that, and
she could at least, smile or appear human at some point along the way, but she was very fierce.
Yeah.
Very tough veneer there.
The guy, I can't think of his name, the bass player, musician, one of them, Huckabee. I like Huckabee, but he's never been a big hot commodity for me, but he is a very good speaker and he's a very good debater. So he did pretty good as well. But, the Scott Walkers and some other people, they kind of faded into the background. I thought also that Bush did himself some favors last night as well. He showed that he had a little fire in the belly there. And there's a strange truth, I think, not a strange, but it was a very astute truth to say that he's very low energy and that's what Donald Trump had said about him, because I think he recognized that is a truth about him. And, even lower is perhaps Dr. Carson, who's so soft-spoken. And, I mean, you almost, it's hard to imagine him actually being the president of the United States for me, because he is so soft-spoken and so genteel. But I thought Bush helped himself last night to some degree. So I really did like, of course, I do like Donald Trump, but there's some question about what his plans are, and we'd like to know what they are. He's a thinking man. He knows what he's doing. He's done well in business. He works well with his advisors. We'll see if he can continue on in this. But I thought Marco Rubio, for me, I was really impressed with how focused he was and how clear he laid out the problems and some of the possible solutions and so on. I was really impressed by that. For the most part, most of them did well, I thought, and it was interesting. Donald Trump may have done okay at this one. And, you have to remember that Donald Trump, I guess like all these guys maybe, but Donald Trump had been out throughout the whole day. He'd been in 3 other parts of the world, of the country, giving speeches and so on before he went to this thing. So, if anything, he's got the energy at his age to certainly do this. That's a long time. And then he was on stage with all these people for 3 hours.
Yeah, they stood for 3 hours.
So that's a lot of time.
Yeah.
So
Fiorina emerges in debate. Trump still dominates. Let's see what the talking heads are saying here. What are the highlights? I know this thing's going to give me an advertisement. Then let me stop it in its path. There we go. Now let's see. Fiorina insisted in the lead-up to the GOP debate that she belonged on the debate stage with the top-tier White House hopefuls. And who was it that Trump took the shot at about they didn't belong on the stage because they only had 1%?
That was early on. I missed that part of it. I don't know who he said that to.
For the second debate in a row, Fiorina was once again the breakout star of the night, taking on frontrunner Donald Trump with finesse and capturing the crowd with polished, zinging answers and an impassioned charge against abortion. What she had to say about Planned Parenthood, that was pretty strong. And I think, the American people need to hear that, because I think so many people, we grew up with Planned Parenthood, and somehow in the back of our minds it was always projected as like a positive thing, as like a good thing. I don't think we maybe after Roe v. Wade, I don't know that as kids growing up we really associated Planned Parenthood with abortion. It was more about preventing unwanted pregnancies than it was ending a life that had already begun. So we're now learning, for those who don't know, what it really was. She challenged Trump, criticizing his wisecracks about her personal appearance, and Marco Rubio proved Wednesday night why so many GOP elites have long considered him a top contender. He can weave his strong handle of policy with a compelling personal narrative. He took on Trump differently than Fiorina or Bush, dispatching the front runner without attacking him directly, instead steering the debate toward his strengths. When Trump pointed out Rubio's voting absences in the Senate, Rubio refused to retort with an attack of his own. He says, "You're right, I've missed some votes, and I'll tell you why, Mr. Trump. Because in my years in the Senate, I figured out very quickly that the political establishment in Washington, D.C., in both political parties, is completely out of touch with the lives of our people. That's why I'm missing votes, because I'm leaving the Senate. I'm not running for re-election, and I'm running for president because I know this. Unless we have the right president, we cannot make America fulfill its potential. But with the right person in office, the 21st century can be the greatest era that our nation has ever known."
There you are. Now, he did a fantastic job. I think everybody did pretty well, and one of the nice things about this group, if you are on the Republican side or the conservative side, is that I believe and can trust just all of these people. If Christie was president, if Rand Paul, although I'm not crazy about Rand Paul, honestly, he's
the guy that had 1%. That's right. He's got 1% in the polls.
Yeah, I'm not crazy about him, but I trust all these people. I don't have that trust. I really have, honestly, I've said this before, I cannot help but have a suspicion about our president. I don't like that feeling. It's very similar to what Rudy Giuliani said about an American president and so on. There's something that does not jive with me. As an example, I really enjoyed Bill Clinton's presidency. I've said this many times. So it's not a Democrat-Republican thing. It's just that I am very suspicious of our president. I don't know. I know now pretty much what his motives are and where he's coming from. The cat is pretty much out of the bag. But I've never felt that feeling of trust in a president. And I do, and I certainly would have that trust with any of these people that were president. I would be very happy for Carly if she could get up and be the president of the United States. That'd be a wonderful thing. And all the way over across the board, any of these people I trust. And that's a very different and much better feeling than the gnawing suspicion that someone is really doing a multi-level chess game on you. You know, that they're working things behind the scenes to get things this way so that you'll say that, and then they do this, and they get their end game. That a lot of trickery and a lot of really, really bad politics is going on. I feel, and worse even. So I'm looking forward to having a president of the United States that I actually believe, honestly, is an American. I mean, I just have to say that. I know President Barack Obama is an American, but I don't know that he has. I'm suspicious about his motives and where he thinks America really should be. God only knows where it would be if there were no resistance from the other side. If he could have his way, what the hell would America look like at this point? If he completely got everything he wanted, all the programs, all the things in place, all the chipping away at the strengths and the military and all this and all that, I don't know where we'd be. And I'm tired of feeling that. I'd like to feel cohesive. This has been a very divisive presidency. And it's not just Barack Obama, it's actually his administration. There's a lot of people, not all of them, but there's a lot of people in his administration that bring up suspicion. The whole way that the IRS thing, where the IRS would go out and, completely mess with these groups that were, that should have been able to get their registration so they could go out and be political groups and so on. And all of that, and there's just been nothing has really happened with that. The Benghazi, all these other things. It's just, it's one trickery after another. And I'd love to feel again that we have, at least from my perspective, a really honest, authentic, in spirit American president that isn't coming from some place that leaves many of us suspicious, because I'm sure I'm not the only one. Barack Obama is he's a scholar. He's a guy that went to school and got his degrees, and I think he was a senator or something like that for a while. I don't have his whole history in front of me. He's a man of accomplishment. He's done some good things. But I think he's been really bad for this country. He's really divided people up. He's used Chicago-style tactics way up at a very high level in the presidency on America. He's foisted those upon us. And the trickery with the Obamacare and all these other stuff just leaves a bad taste and suspicion. We don't want to feel that way. And some people really adore what he's doing and can see a future in it. I'm one of those who can't. And I made a real effort when he was in to really try to follow what he was doing and get behind him. And I was left deeply suspicious of his motives. So I'm looking forward to, and so my counter to that is that everybody on stage was, I could take any one of them and feel pretty gosh darn good about it. So several of them are very likable. And, I include Donald Trump in that. He's a bit of a wild card. But I think, again, that the part of his popularity is that people know that they've been given 6 years of teleprompter, carefully worded, politically correct crap so that the administration could manipulate and go behind the scenes. Nobody is really real. And there's a reality about Donald Trump that comes across that was appealing to a large number of people, and the fact that he is a doer. And many of these people on the stage could run the United States very competently, and I think Carly has included that, no doubt. It's just whether or not she can get the votes, and so on. So I enjoyed it. I enjoyed watching it, and I wish all of them the best. And we'll probably see it.
What Huckabee, what little he had to say was very good.
Yes,
he just
so did I
didn't hear much from him. He didn't, and I don't know that. I guess we have to blame the moderator with some of that.
Yeah.
And Christy talking about Hillary and the fact that she wants to do the abortion in such a way that it maximizes the sale of the body parts. I mean, this thing got pretty graphic. And Christie says, that was one of his lines. I'll prosecute Hillary Clinton. I mean,
Yeah.
here we have someone that's about ready to run for president that could actually, end up being prosecuted for crimes of, I don't even know what the crimes, from the mail server to Benghazi to all the
It's
things.
extremely unlikely. It's extremely unlikely that she's going to be prosecuted for crimes.
Yeah.
The Clintons have a very, very long history of great scandal, and those scandals leaving them untouched. It doesn't mean it'll last that way forever, but this scandal will damage Hillary Clinton. It has damaged her and will damage her. So there you are.
Let's see. What do we got here in the chat box? Casey commented about Huckabee. One of the most intelligent statements was from Huckabee. Eliminate direct taxation on wages, etc., and enact indirect taxes, consumption taxes. Then no one can complain about anyone, especially illegal immigrants, not paying taxes. So, that several of them touched on a different way of taxation, and any way of taxation makes more sense than the convoluted. What is it? 70,000 pages. They gave the number last night that our current tax code is at.
Yeah.
It's
Our current tax code is like somebody writing code, actually, software code for a small project, and then when something comes up, they add another little clump on to take care of that little thing, and then another thing comes up and they add another clump on, and then another thing comes up, and before you know it, it's what they call spaghetti code. It's just a bunch of pieces just clubbed together, and it really doesn't work well, and it has complexity and questions. New questions come up. Well, you do this over here, but when over here you do this way. It really is going to explode at some point, and it may not be for many, many years, but the tax system does need to be overhauled. I did like the idea that Huckabee brought up, and it's been brought up before, but I liked his presentation of it, which was that we're not going to tax any producers. People or companies or workers that produce something are not going to be taxed. They're going to tax on the consumption level. And that's a very interesting flip around, that instead of taxing your income, especially if you're producing products or working for a company that produces products, you're going to go out and spend that money and you're going to be taxed at the consumption level. And that would mean that you would simply pay that tax and you'd be done. There's no income tax. And that tax would, obviously prices would go up at the market because that's where that goes, but the money has to get to them somehow. But we all have to spend depending on how complex your financial picture is, we all have to go through the whole thing each year of going through all that, and we all do it. But it's costly and it's complicated. It's fraught with potential errors and so on, and you have to redo it sometimes, and all kinds of stuff. So the tax code certainly needs to be redone, and money has to be saved in the government. They can't just run it. But this has been going on since day one in the government. That's not just this administration. Although this administration has run up more debt than all previous administrations. So, this is really a kind of a turning point in American history, perhaps, that if we don't take care of this debt, we will suffer perhaps the same fate or worse than a Greece or some other European country that has run themselves into debt. So it really can happen to us. People get complacent, and that complacency is very dangerous. So.
Let's see. After Obama was raised in Malaysia, went to a Muslim school until 10 or 11 years old. Yeah, that's true. That is a fact. James from Florida says, after many years of American politics, I've come to a 5-word summary of everything political. Nothing is as it seems.
Mm-hmm.
Okay.
Mm-hmm.
Carson says Hillary should already be in jail awaiting prosecution. I think many feel that way, but yet there's still people showing up to campaign for her. And,
an ordinary person who had taken emails from the government and put allowed important things to be on an unsecure server would certainly be in court. In court meaning that paperwork had been filed against you. You're not standing in the physical court, but you're in the process, and nothing like that's going to happen to Hillary. It's just the nature of, these very high-end things. She has a real chance of winning, but, things could change over time. She may have to reinvent herself in some way. She's a tough one, though. It's hard to reinvent what Hillary Clinton really is all about. Bill Clinton is a much more attractive persona, and charisma. Hillary doesn't really have it going on like Bill does. So
it's going to take a lot to erase the memories of all that. Yeah, but if anyone can do it, let's see, nearly 23 million watched the debate. So this is a big. We've got a big. And we've got, 5 months, I think was a number I read today, until we have to make a choice. And so that's when they start to narrow the playing field. How does it go? There's a caucus in Iowa? You'd think I would remember after 4 years ago, but how does it go?
I'm not 100% sure what the 5 months that you're talking about, but I wanted to say something that it's very compelling to me that there are 23 million people in the United States that at least watch the debates. There's 300 plus million people in the United States. I'm very happy that 23 million were watching because they care about the United States one way or the other, and that they, even the people, ostensibly, even people who have ideas that maybe you or I think are just nuts, they care about the United States of America. That's the problem that's where my suspicion comes in with this administration, which is that I don't know in the end that I can say that they care about the United States of America. That's my problem. I honestly don't really believe that's the case. I believe they care about their agenda. They care about their program of what they're trying to get to, which I'm suspicious about where they want to finally get America to. Another 8 years of this, we would certainly be in a much worse position than we are now. But I don't have that feeling for most of the other candidates, both on either side of the aisle. So I'm glad that 23 million people were concerned enough to watch and care enough about the United States of America, and to watch it and to be seriously considering what is being said and who is being said it and who's saying it. And under these intense times, we have a lot of people trying to rise up to be the President of the United States, and therefore we have greater choices this time to select from. The population does, and it's going to be a very amazing election, however this thing all shakes out.
Indeed. Well, the markets are starting to climb just a little bit here. Let's talk about the markets for a few minutes before
Sure.
we have to go.
Sure. You want to start with the S&P?
Yeah, sure.
Okay. Well, we are climbing today, and I told you a couple days ago, I think on Monday or Tuesday, that the S&P we felt was, going to move up from our forecast. I might as well give it to you. Was that as soon as the market closed hourly or daily above 1950, that would indicate that the market was going to run up to 1994 or /96, and it was going to do it during this week. And because this week has this extra piece in it, which is this very, very important meeting, the Fed interest rate announcement meeting, our forecast for this to happen is delayed by a little bit. We're now a little bit later in the week. It's Thursday, and we're just now starting to complete those numbers. You had asked me on the radio the other day, on Monday or so, that if we felt the market was going to get above the 1983.75 level, and I told you yes, we felt that it was. Well, the first and main target was basically 1994 to 1996. They can certainly go substantially higher than that, but we're in this move. I'm sure some people are starting to probably get antsy to get out of here because we're very close to 94 now. We've got to 90, 91.75. But the bottom line is that we felt that this was a very likely move given the set of conditions, not the world events, but the set of market conditions, which are a very different way of looking at the world, because the markets describe what they're going to do, and then you can say to yourself, well, what would that mean perhaps if the S&P was going to go up to 1994 to 1996? What would that mean to the bond market? What would that mean to such and such market, and so on? So this is the move that we talked about, and we're here now seeing the market grind its way up. The market showed a great deal of resiliency and strength early this week as they were climbing. And this was before they got out, but they really did. They showed some signs that the market was really in a strong position and that a great deal of power was going to be expressed in the market. This is, again, why I warn people to for trending markets, this kind of thing, to not use overbought and oversold indicators, because they will get overbought and the market will just keep going. And so, again, I don't believe there is such a condition, an actual condition as overbought and an actual condition as oversold in the market. I don't think it exists. Now, that's my opinion, but it's based upon many, many years of looking at the market and trying to really determine, very, very basic truths about the market. Because in almost every case, what science is doing is trying to discover basic truths about something. They see the phenomena, which is later, the phenomena is outside of perhaps the basic truth, it's beyond it, but then they go through the phenomena, they try to find what's the basic thing about this thing, what's one of the core things we can say about this. And when it comes to the market, there's a few very important core things that I have discovered that are at work in the market, and I'm sure there's deeper things as well, and I'm sure there's people that have found deeper things. But for us, that's where we like to start from, is that very core, and then we'll build our way up to how the market would manifest itself off of that basic, very basic thing. Very basic thing. So it'd be like taking a look at a person. Person's a very complicated piece of machinery. He's got all kinds of memories, he's got conditioning, he's got a physical body, and all these other factors at work. But one of the core things that you could get through all of that manifestation, a person working, dancing, having a career, making money, shopping, think of all the activities that are there to sort of blind you to the core. Well, one core thing would be self-preservation. So you could cut right through all of these things that a person does, and you could get down to one of several, but one very important basic truth about that manifestation, that person, which is that he wants to preserve himself. She wants to preserve herself. That's a very core thing. They're going to do things and act in ways that preserves themselves. So that's a good example of a really core basic truth. And because you would know that about a person, you could then perhaps under certain sets of conditions be able to say, under this set of conditions, it's very likely, knowing this core truth, that this is how that person's going to act, just as an example. But we're really making an illustration about the market. So knowing these core things can help you to describe and even forecast what markets are most likely going to do. As I've been speaking, we got up to 1993.50, so we're completing, and I know we have a lot of people in this and getting out at these levels. We would like to be out of these positions and will be out of these positions from the hourly or daily close above 1950 before the Fed announcement, and we're going to remain flat. And unless you're really, really skilled or you just want to be a gambler, I would suggest that you're out as well, so that you don't have to try to deal with the action that would happen if there is an interest rate and even if there isn't an interest rate hike. So that's basically
whether there's a hike or there isn't a hike, there's a mixed message in there. If they raise,
very true.
If they don't raise the rates, then it's like, oh wow, we're in such bad shape. They couldn't even raise it, a quarter of a point. So
well, and I think the mixed message thing is very important, and I'll tell you my version of what you just said, which is that the mixed message could very well be that they, as an example, do raise the rates. Let's just say that was what the outcome was, and then they're going to talk about it afterwards. The Fed's going to have Fed notes and minutes and so on. and they're going to go right around what they just did and said, well, if we don't like the results, we can take it back. They can, in other words, sort of mitigate and send a mixed signal. They actually did raise the rate, but then they're in their wording, they're going to say something opposite, and you're going to get, just like you said, you're going to get these mixed messages from them. They could not raise the rate and say, we really felt we should, but we think we're going to wait. And so in the end, we may end up with a lot of mixed messages from this, and the traders will trade it as they may. So,
and that's something to remember, that there will be. It's at 2:30 that they're holding the press conference, or 2:15.
Oh, the press conference. Yeah, I think the press conference is 2:30 Eastern time.
Yeah, so the market will have 30 minutes to digest whatever the announcement is, and then she'll be on to explain why they did what they did in some way. I don't know if she's going to take questions today or not. Do you know?
Yeah, you want to hope that these people are really not political and not doing something out of political expediency, and that they're really doing something that would help as best as they know how. That's what they're there for. Help the United States of America, get back on its feet and so on. Ultimately, interest rates are going to go higher, whether they raise them this time or not. They would only be a temporary pause if we don't raise them this time. Pretty sure there's going to be a temporary pause, and that's all, before they would raise the interest rates. So, raising interest rates probably helps the economy, doesn't actually hurt it.
Right, but short term, traders throw a temper tantrum and the market takes a dive.
Oh, or it takes a dive perhaps. That's the fundamentalist problem right there, is what do you do with that information? Do you go long or do you go short? If you get that information that they've raised the interest rate. That's the part of trading that I've never really been able to put together well enough. And I know Jerry, who does a lot of fundamental works, Jerry Fagnant, who's been on the program before, he's done a lot of that work, and he has a pretty good grasp on it. But I think it's difficult. It's just like technical analysis. I like technical analysis much better, not only because I can understand it better, but I think it's much more precise in what it states, as opposed to the generalities that are often associated with, well, if they raise the rates, that would really push this lower. Well, over what period of time, when, where, how, all of that isn't answered. So the technicals, in the end, the technicals of the market are going to be seen, I think, over time as much more accurate in foretelling the likely movement of the market than is news. Until that time, though, people, even to this day, technical analysis is not widely accepted as a real force in the market. And at some point it will be. It's much more now than it used to be, but we may have a long time before the general population really takes that into consideration over mere news,
Mm-hmm.
So that's fine.
There's still the element of voodoo and witchcraft. So.
Yeah. Well, it's all voodoo and witchcraft until it's understood at some deeper level, and that's why, that's what science tries to do, is to find that deeper level and find that thing that is not, you're not being distracted by all the flashing signs and colors of its manifestation. You're down there at the core level. Hey, this thing's going to preserve itself, whatever it is. So I think that's a pretty good example of reaching for and studying the market to get that core truth. So here we go. We just hit 1994, and we just completed a pretty nice move up here, and
there it is.
Yeah, there it is. So it's actually the number is 94/96. We'll see if they can get any higher a little later today, but you can see that a slow market is not a weak market. And there's an old saying, never, I forgot exactly what it is, but never sell a creeping market, or never sell a lazy market.
Isn't it quiet? Isn't it quiet market?
Quiet market.
Yeah.
Quiet market. I've heard it a lot of different ways, and I'm getting older, so it's all just meshing together in a mush known as my brain. And but whatever it is, it means that the market may be very quiet, but it's not breaking any of its technical trend, and it's still, in many cases, very, very strong. That's what this market has been like. It's just been very quiet and slowly grinding higher here.
Ed's with us. Let me open up his mic.
Please.
Ed Corey, welcome to the show. I got your mic open, so you need to open it up on your end. There he comes.
Well, that was my normal entry. Can you hear me?
I heard you.
So my
Yep.
my tablet fell off my desk as I was
Oh.
grabbing the microphone. I was on another computer. I'm sorry. How y'all doing?
Good, buddy.
Good, Ed. How are you?
Good. I'm glad to hear all the wisdom about what's going to happen after they raise the rates.
I don't know if it's wisdom. It's musing. We're musing about it.
Yeah, well, I think this is the way it works. It's just when you come into a known event, there's people that are drawn on both sides, and we really won't know. We have the tendency to have the tools here technically to know what to do when it starts to happen and when it starts to show certain things to us. But until we see the card played from the Fed and see how the market reacts, then that's when we'll have some confidence about it. I know this in studying this stuff, and I've read a lot of papers on it. Generally, the first interest rate increase is not negative at all for the markets when you look back on it after about 60 days. The market's usually going in the direction of the interest rates.
So are you saying that when the
contrary to
market,
what people say, that if you look at history, it takes it a while to kill the goose.
I see.
And we're starting from zero.
Are you saying that the in periods in the past where the interest rate has not been risen for or has not been hiked for some long period of time, that the first interest rate raise is not? Is that what you're saying? I just want to make sure I understand.
Yeah. In general, that's right. But then I don't know that we've ever started at a zero interest rate.
Right, we haven't.
So it could have something. It could have more of a effect than it normally has in the past. But I would say this: we still have exceptionally low rates. If they increase it even a quarter to a half, people are still in business is going to be able to borrow money. They're not going to say, well, in fact, it might create a lot of investment borrowing. People might feel, and so they'll go if they were sitting on a capital project, this might push them into finally borrowing the money and putting it on the table and going after it. So it's not real predictable. I do think, though, the market, to me, looks vulnerable. The charts look vulnerable for more of a correction to me, but it doesn't mean it can't go up and make new highs. I'm not betting on that. But I'm also not, I wouldn't be surprised if they made an up move first. I mean, we've already seen a pretty good bounce here. So.
Oh yeah, we're rallying into it.
Which always is that puts my antenna up to really be careful that we don't see a reversal.
Well, I agree with you, Ed, on that, as in many cases when the market moves into the announcement, barring this particular set of conditions where we haven't had a hike in 9 years, but many times when it rallies into the announcement, it ultimately ends up reversing at the announcement.
Yeah.
Even if it spikes up higher, whatever, it ultimately ends up lower.
I think you're right. I really think you're right.
James throws in, you overlook the stimulative effect of investors actually receiving some interest income on their money.
No, I think that's fantastic. I think that is part of the juicing of the economy, that the higher interest rates will help because that interest rate, it's really a big deal. I mean, it goes into every industry. Interest is, there's so many industries that use borrowed money, and it just goes, the list just goes on and on and on. So a higher interest rate is juices the wheels of the economy in a way that I think will be very noticeable when it finally occurs. And it takes time for that to get into the economy and show up, but I think it'll make a sizable difference just right around the time, perhaps, that the new president is coming into the office, perhaps, depending on how much it's raised and so on.
Right. Right, and if they raise it and they see there's a problem, as timid as they've been to raise the rates so far, I can't see them being aggressive if the market's tank. They're not going to put another interest rate in just because, well, we're on our track here. They've got more flexibility built into their statements than any other Fed I've seen, and they're not going to keep increasing interest rates if it's going to be really negative on the economy. I can't believe they'll do that unless there's some kind of ulterior motive that if the dollar was tanking for some reason or they had the currency collapse, then they might do it. But other than that, I can't see them putting the pedal to the floor on this thing. The next rate increase won't be automatic. And they've reversed themselves before too. They've had some false starts. In earlier Feds, I think even when Greenspan was around. So they were quick to reverse their course on, they jacked it up enough and they saw enough slowing, they got scared and they reversed the whole thing. And they can do that. They can call an emergency meeting when they want. Who knows? They have all kinds of power to do that. So I don't know. It's just a lot of unknowns. The good thing about technical analysis, where I agree with you, David, is that we don't really need to know the long term to make money. I mean, I look at the long term because I think it's like the tide in the ocean, and a lot of my trades are easier if I know I have some underlying current in the market.
Oh, absolutely. I completely agree.
So, but the fundamentals, I grew up in the fundamentals in the oil business, so I'm real familiar with them. It took me a while when I had to make this inventory decisions and how much to sell, and it created a conflict in me when I was starting to learn technical analysis because I had a guy trying to teach me it, and I had other guys that he was continuously against what the fundamentals were saying or what I thought they were and what the industry felt. And so it took me a while to get through that, and I realized there was just too much noise to sort it all out. And I'd rather look at a chart. I really have to look at a chart to make a real decision. I just do.
Yeah, many years ago I was asked to get in the petroleum industry, but I said to them, listen, I don't want to have to get up oily each morning. That was something I said at the time.
Oh, well,
right.
I didn't
That's
even
really
think
bad.
about that, David, when I got it.
That's so bad, I think I better go. No, I have 2 more minutes, and I will have to go. Ed, anything new with you with regard to markets or anything that you're looking at, or anything?
Well, not really. I'm just glad this thing's going to get over with here, and we can get on with trading the market. Not that it hasn't moved in a controllable manner. It really has, and it took out numbers that, I'm a little surprised that it was able to get this far. But when I compare it to what happened in China in the Shanghai Stock Exchange and on the German Stock Exchange, their retracements aren't anywhere close to what ours are. And if they were the source of the problem, a more global, widespread problem with economies, if they are the source, they haven't been fixed yet. And so that gives me a more favorable opinion that we should get another leg down. We should test the lows that we hit last month, and I personally think we'll take them out. Although the market goes over 2020, I'm going to start to scratch my head on that about the odds of it making it through that last low will start to decrease if we get that high. But until I see that point.
Well, just remember the kind of volatility. We're not saying absolutely for sure, but this could produce tremendous volatility that could make prices at any level get reached. I would not be surprised, as an example, that if the market failed up here, that in short order, even as early as today, I'm not forecasting this directly, but within a day or so, we could be down at 1950. That's the kind of volatility that this market could have. And the same thing on the upside. We could be tremendously higher in a short period of time as well. And that's why it is important to really know to stay out of the market just for that first run, unless you're really, really skilled, and know what you're doing.
Yeah, you have to really be trading short term with the system. You have the confidence to believe in a market that's fast.
Yeah.
If you don't have that, you don't want to mess with it.
Yeah.
And not many people can do that. So
Yeah.
I agree with you, David. This thing doesn't really bother me. I don't normally I would be really sketchy right now that hey, this thing has rallied enough that I might not get to see that 1831 number again. But I look at China, which hasn't even made a 236 correction, and I look at Europe that's a little over its 382, and here we are knocking on the door of the 618. So if those guys started this, they're not out of the woods yet because they have not been able to follow us up to the degree they should have.
I see.
And what you said about the increased volatility, I'm willing to break some of the rules that I have and give the S&P more room than I normally would because of the odds that I in my systems that I use give me a pretty good idea of where the market should or shouldn't go. But I've noticed, and this has happened to me before, I can't sit on those things with the S&P like I can some other commodities. You know, because it's not a pure commodity, and it does not. You do need to give it extra latitude. Just like you said, this thing can go down more than we think, and up more than would be normal, and still come back and turn on a dime.
Yes. Yeah.
Direction.
Yeah.
And,
it makes for a very interesting thing. And so if patience is what helps traders succeed, then we really only need 30 minutes or so of patience after the market starts to move, maybe even 15, just depending on what you're looking at, to finally get back in or to start maybe putting a trade together. But this, I think you'll agree, Ed, I hope you do, that this move is going, because this is Thursday, this volatility is going to take us all the way through next week. We own, meaning all of us, everybody owns next week with regard to volatility. We're going to have good volatility all through next week.
I totally agree with you. I think it's going to go a lot longer than that, and you probably do too. There's just you can't have these large standard deviation moves like we had last month calm down in a month. That was just too big of a move. And there's too much unsettledness really in the players right now. That's why no one knows what to do at this point. I mean, it's pretty hilarious to turn on the TV and listen to what they say. I rarely turn it on, but I turn it on around the Fed meetings just to see what they say. There's no agreements on anything, which I like to know which way they're thinking. Well, I can't get a consensus at all in just the different shows that I looked at. There's no consensus opinion out there right now. And I think guys that trade big money are just like that. A lot of them are out of the market. A lot of them. And I think the smart money is going to sell this rally if it does rally.
Okay. Well said.
All right,
well, listen,
David,
I do have to go, Dwayne. Thanks for having me on. Ed, nice to chat with you. We don't chat very often.
Dave.
I'll talk to you anytime, and I'll see you here tomorrow, Dwayne.
All right. See you tomorrow.
Thanks again. Bye-bye.
Ed, you want to take the screens for a few minutes? I know you have to go early today.
Yeah. It's let's see. Yeah, whenever you want to pass them to me.
Right
I think the point.
There you go.
Today, and he brought it up, that the market in times like this and increased volatility can do more than we ever think it would be on a normal basis. So if you're using statistics on what it should do, you have to really unweight that to some degree when you see a market that can move this much in a month. I mean, this is a big deal for the S&P. We know it's watched by a lot of people. We know there's a lot of participation in it from external influences, let's just call it that. And in knowing that, I mean, I'm pretty hard on my numbers. I'm hard to get off of my numbers that I have faith in. But I've learned that faith costs me money in the S&P, especially in times like this. So even though I'm quite positive this thing's going to reverse at some point here before it makes new highs, it doesn't have to, because it's shoved that in my face before. But the odds are that it will now. Dwayne, I think I sent you my weekly report, right?
You did.
The predicted high for the week was 2005. And that was based on the December contract, so we're still a little short of that. The predicted low was 1929, when we hit 1935 earlier in the week. So we got within 6 points of the low, when we're back up to within 10 points of the high, or 11 points, I'm real curious here to see what's going to happen. The fact that it didn't hit the low, I don't know how David trades. I've listened to him, and I'm intrigued by what he says. But my stuff is totally, unless we're using the same algorithm, and I know we're not because it's different than his.
Right.
But what I would expect, and what I'm curious here is to see if this thing doesn't have the power to get through 2005 on the December contract.
Our highest weekly level is 2016/17.
Well, there you go.
And
is that based on the December?
The lowest we've hit for the week in December was 36.37. I'm sorry.
Okay.
Did you say December? Yeah, that was for December.
Okay. I was thinking that December I got 1935 somewhere, but it's right in there. Anyway.
Well, I'm just saying 36.37 is a zone we had this week.
Oh, that's your zone. So you caught the bottom on it there.
We had two zones below that, though. We go all the way down. Our lowest zone was down at 1890/91, and our highest is up at 2016-17.
Right. Well, the fact that we came off that, this will be interesting. This will be real interesting. And the real interesting factor is going to be where it closes today. Yeah. I'll be real curious to see what they can do with it. I have some resistance at 2018. And I have some at 2000 even, so we're already a little bit through that. Those numbers I was looking at, but I want to show you this monthly chart here on the S&P. You can see our retracement hasn't even got close to the 382, which is 1726 on the front month. And I want to come right over here before I walk into this a little more and show you the Chinese, the Shanghai. There's the Shanghai Stock Exchange. And look at its move down, which was much greater than ours. And look at its paltry bounce. You can see where the 382 is. We're knocking on the door of the 618 right now. And this thing, you can see, is down here. So there's a problem with that market. If that's where everything started, and all the Asian countries are feeling the punch from China, because they've fueled those other stock markets and the businesses in the Koreas and the Malaysias and the Indonesias. They are all dependent on China. So the fact that the Chinese stock market can't rally, can't even bounce, if that started this thing, it's not finished yet. Otherwise, it's had a really good excuse to bounce. And so I think that's important to note. That tilts me more in favor of we get this other leg down like I think we are anyway. It's a wave count is calling for. But this rally has been stronger than you typically see for a wave 4 bounce. And here's the German stock market's kind of in between ours and the Chinese stock market. The German stock market, you can see, hasn't made it back to the 382 yet. But its wave count is more similar to ours, and this is counting itself as this is going to be a wave 4 down, whereas the Shanghai stock market counts it as a top, a completed move up when it puked. So it came off too much. It just, it was labeling it wave 3, but like I said, the Elliott wave and the way it's mechanically counted, there's no conscience there. It'll change on a dime if it violates certain numbers. And that's okay. I recognize it's certainly not infallible. I just need to know when it's getting off track. And that's why I like to use it as a framework. There's things that trigger me in trades are shorter term signals that I take, but they're not, they'll usually last a few days. I'm more of a swing trader than I am a day trader. I used to day trade like crazy, but I'm getting a little too old for that. Anyway, so you can see, these are important points here when we come back to look at our stock market, since they're the ones, everybody says, that start us down. And some of the numbers that have come out today are not that great, economically the last couple of days. show that we're slowing down here too, and I certainly think we are. So when we look at our monthly chart, back to the S&P, we're pulling back. We haven't even hit the 382. When we look at the weekly chart, it shows a completed 5-wave move up, and that is the third wave on the monthly. So that gives me more confidence that this rally should be sold. And the question is where? And I haven't got an entry point yet, but I'm looking for it to have trouble between 2000 and 2020. And I'm willing to even give it rope all the way up to 2050. As long as it doesn't close over 2050, I think we'll get a significant move down. So I have to pick a number. That's my number. My number on the downside was 2011. I said it several times, and I waited patiently for it. It finally broke it, and it never really looked back. And, you know, it came all the way off once it broke it. That number on the upside is 2050. Would I get long over 2050? No, unless I see some confirmation of other items. You know, if the other foreign stock markets are recovering, I believe we'll be the first one to make new highs. So if they're recovering with us, then I'd be more inclined to get back in. But I'm going to wait. I'll probably get a better setup to short it than we have right now. But maybe not. You know, but I'm willing to wait. I don't believe it's wise to trade in front of the numbers unless you're going to do an options strategy. If you're going to do that, you can think about it. But you got to know how to control your risk on that too. And this shows me we're still in a wave 4 up, very unconventional wave 4, in that it's rallied more than it would on a normal wave 4. But this is the S&P, and when I look at this chart, this is the C leg up of the wave 4 from here. So that's kind of confirmation that it too is backing this. And then the short term, here we are for today. This is a current wave count. When I came in this morning, this thing was down here putting in its wave 4 retracement. It got down just a little bit below the 0 line here, which is wave 4 minimum retracement, and it did turn on it. So it did turn up from these levels, and we made like a 14-point move up. It doesn't really need to do anymore. So it could just...
Richard had sent me an email. Today and the next 2 days, Friday and Monday, should tell us a lot in how strong or weak the market may be. Much volatility. Ed, wave 4 coming to an end possibly. Dwayne had sent you an email earlier about the importance of the time period right now. Okay, I just went to find that email, Richard. It says, thought you might find interesting and can share on the radio. Friday, September the 18th is a major focus day. Zone would be from Thursday, September 17th to Monday, September 21st. September 18th is 34 days from the July 31st pivot high. And September 18th is 6,283 days, which is 2 times pi. Move decimal over 3 to the right. It's a number that's important, not where the decimal point is. Okay, from October 1990 low to the 87 high, there are 1,244 days from the 1997 low to the 2002 low. 1,244 times 618 equals 3,257 days from the 2002 low is September 18th. Implication would be if the markets are making new highs into this zone, we would expect a reversal. If the new highs are made after Monday, September 21st, the market will have penetrated a major time barrier, a very bullish indication. Also, important planetary energy taking place today, the 17th, with Mercury turning retrograde at 2:09 p.m. Eastern, just around the Fed announcement. And the planet Saturn changing signs and going into Sagittarius at 10:49 p.m. Could be an interesting couple of days. Okay, so that 2:09 time period, I guess that's what you were referring to that you wanted me to point out. So, okay, so that's going to happen, 9 minutes after we get the Fed announcement. So, I guess we could look for a potential reversal is the point you're making in that. So we'll watch for it. Ed, a question from Burwell. Go ahead.
Okay.
No, go ahead.
Go ahead. I'll take the question.
Assuming that we will see a lower low than the 24 August low, do you have a wave 5 target?
The question is, do you want to see it? I'm not sure anybody will want to see it, but yes. Yeah, let's just take a look at it, because I'll derive that target on that. In this case, is he talking about a wave 5? He's talking about a wave 5 upside target, right?
Assuming that we will see a lower low
Yes.
than the 24 August low, do you have a wave 5 target?
Well, I won't know that till we see the low, but what I will say is, you can see on this thing, if we got a normal low that would fall between these two here, which is, the 382 and the 50% point, which, let me get this off here. Sorry. The 382 and the 50% point, 1726 and 1601. Those have been my targets. I think I stated them in here, and I think I showed it on my write-up when I put it up, on my weekly write-up. But let's assume it hit this first fourth wave. It hits the first fourth wave, and lets me move my chart like I want to. The first fourth wave would give you a target of 27. I'm sorry, the first fourth wave would give us the higher target. The first level, the 382, would give us a target of 3446. Big number. If we went to the 50%, the target would be 2786. So we have to see that fourth wave, because the deeper it goes, the more these will come down. But it first has to make new lows and get under these targets. So if it comes, it's going to choke everybody, and we'll have a really, I think that'll be an area where I'll at least shed more of my equities that I'm holding. And I'll find a way to cover them, looking for my next down entry into the market. So I'm sorry to not give you the direct answer, but that's the only answer I can give you right now. I need to see the 4. And we'll have more ideas on the 4 depending on what this is. The 4 will not change. Those targets won't change unless we make new record highs. Then they'll be recalculated. Over 2134 on the front month. Okay. Wayne, I got a little over 2 minutes, and I'm just going to go as fast as I can here to get through this. The crude oil market hasn't changed much. We're still in the 5th wave down of this bigger 5-wave move down that we've been following for several months. Actually, we've been following this thing from here. So here's the point here. This 5th wave is all I'm interested in now, is from this 4 to 5 down. I need to dissect that in a way that I can get confidence in it. So there it is on the daily chart, which started this 5th wave from 62.58. This leg down should be 5 waves. We have a 54 up here, which means very high probability of new lows in wave 5 down. This thing has got to come up here and breach the 618 to start to question it. The 618 is at 52.62 in crude. It may test it, but I don't believe it's going to be able to do that. I think it's going to come down, and it should make new lows below the 37.75. Current projections are, and these projections will come up if this wave 4 top, which is at 49.33, goes higher. So if this proceeds on up to the 618, these targets, the first 5th wave target here is like 34.36. The second one's down there $25. Now I haven't put it out because I don't think it's going to make it. But my annual projected low for the year that was generated on December 31st of 14 is $26. $25 to $26, right in that area. So that coincides with this. That would be really ugly. This would be normal. This would be an extension. If this can go higher, these targets come up. So it all depends on the rally. And really, you can't exactly tell what the market's going to do anyway, so it's best to wait till you see more of the whole card in here before you do anything. But this is very weak, in spite of what they're saying out there. This is very weak. And this could be erased if the Middle East blows up. And assuming 3 or 4 million barrels a day comes off the market.
Yeah.
This will be $10 higher that day. So don't, that's not much to bet on because we haven't seen it happen yet. But that doesn't mean it won't.
Fed funds unchanged.
Oh,
No
really?
change in the rate. Yep.
Well, gold's going to go up on that. We'll see if it stays up. I've been watching gold too, but unless there's something I have to answer, Dwayne, I want to run.
Well, there was a last question from Burwell. Ed, do you have a daily wave 5 bottom target after the daily wave 4 is complete?
On what?
I'm assuming that was still on the S&P.
Yeah, that's the one I answered, I believe.
Well, that one was
until the wave 4 is. If we assume the wave 4 is complete, okay. If we assume this wave 4 is complete up here, let me get to it. If this is a complete wave 4 up here, we have a target. This is on an intraday chart, a big intraday chart. It's still down in the same vicinity. We said 1726. This is 1736. That's the first target. If it decisively gets through there, then it's saying this is Elliott fibs. I think the more powerful fibs that I'm using are at 1726 and 1601. But this is going off of more of a momentum and fib ratio, and I can't get into it right now, but it's a combination of price and time that those were generated, whereas the fibs are just straight fibs. And in this case, I'm more comfortable watching the fibs. So, and those fibs are generated off the monthly chart. Okay, they're generated off the wave 2 bottom, which was at 1068 back in October of 11. So these are real powerful numbers. There should be profit taking down here, if not people trying to buy it. If there's enough selling pressure and they get it through it, well, have a pretty easy time getting to the 50%. When it gets to the 618, there's going to be a big battle line between the buyers and sellers there. Big. That will have big ramifications for what the market's going to do on the next trip up. The higher, if we can get to the wave 4, and we haven't reached the minimum retracement here at the 0 line, we get our little 0 line ticker in here, we're going to be saying, well, this doesn't mean we're going to hold. It means we've met a minimum retracement level. We haven't even made that yet. So either this thing's it's gonna either, totally abort this wave count, or it's gonna hit that 0 line. So this, we'll see what happens. I know that doesn't give you much faith in it, but I just need to know what to do when it does something. I mean, that's my whole set with trading. I need to know what to do when certain things happen, and that's what I try and focus on. And
all right, buddy.
So,
I know you got to run.
Yeah, I just got a pretty good position on, so I want to babysit it a little bit. Okay, thanks a lot, Dwayne. Sorry I had to be short today.
We hit 2,000. S&P cash market hit 2,000. All right, let me grab these charts.
Yeah,
well,
it's pulling back pretty sharply right now.
Let's see.
So the bulls will be trying to hold the low of the day, by the way. If they can't hold that, they'll be, in trouble.
All right, so we've put in a low of 84. So far.
So did you take the charts back, Dwayne?
Yep, I got them.
Okay, you got them. Okay, well, I'm going to jump. Thanks
All
for
right,
everything.
buddy.
Sorry
Thanks so
about
much.
being short.
No, that's
Appreciate
okay. We'll see you again in a couple weeks.
Sounds good.
All right, so there you have it, guys. Fed leaves the rates unchanged. And, boy, the market's really taking a dip on that. First a rally, we got up to 2,000. It's the exact swing high. Big round number at 2,000. Yep. So the round number's at 2,000. And the swing low so far is 76. Now we're already back up to 80. Okay. So we'll leave you with that, and we'll let the markets factor all that in, and then we'll be back tomorrow with more. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
Hello and welcome to the Mind of a Trader. This is Steve Croft, and I thank you for spending a few moments with me this morning, and hopefully